and this may be for George or, forgive me,
Eric Schuler.
Mr. Schuler. Has there ever been a bank who, if you took this, without, I agree there's a differential between the, but if you took this asset in to a bank and had showed claims and is a financial institution, they may not want to do it just because of their own lending practices, but are they legally allowed to provide a loan with this as collateral?
And I'm just saying, I'm not giving legal advice because I'm not an attorney. Because of the restrictions that CFPB now has put down on Consumer Financial Protection Bureau, has now put down on financial institutions, there has to be a tangible asset there to be collateralized. There is no collateral, there is no tangible asset on this thing. The other thing too,
I mean, you can go in and get a line of credit.
right, but if you default on that, that financial institution can come and sue you. They can task your wages. They can ruin your credit. They can sue you to get the money back. We can't do that. So there is, if that case goes south, or even in the instance with Mr. Hall, let's say Mr. Hall got our $6,000 from us, and 6 months down the line he said, you know what, I'm dropping the suit, that's it, I'm walking away. We can't go after the $6,000 to him. That's it. If he drops the suit, there's nothing we can do.
What was the total damage award or settlement? I don't know if it's settled.
Mr. Hall walked away with a check in hand for $65,000.
Is that before or after attorney's fees?
That was after attorney's fees. His check in hand after everything was paid was $65,000.
Mr. Chairman, I know we're running short on time, so I want to speak to that question. The bottom line is yes, banks can, if they choose to, make loans for those purposes. The fact of the matter is, Mr. Schuler has presented. He's flown into this state 3 times over the past 2 years to try to make sure that in my service on the National Conference of Insurance State Legislators that I did not support capping the interest rates that they charge. What they travel around the country and do is ask that any legislation passed in any state have no caps on the interest rates that they charge. They don't want to be called a loan because they don't want to have to comply with usury rate caps in any state in this country. But they also don't want to be called a security because they want no regulation whatsoever. This is an issue that I have found to be simply payday lending on steroids. What you have before you in this Institute for Legal Reform is that consumer lawsuit lending lacks regulation and transparency, harms consumers by hiding excessive fees and interest rates, and abuses the judicial system by prolonging lawsuits and artificially inflating settlements. The lawsuit lending industry attempts to evade consumer loan laws, and banking regulations are drawing scrutiny from state attorneys generals and other consumer groups. And as you may know, both the National Black Caucus of State Legislators and the National Hispanic Caucus of State Legislators passed resolutions calling for lawsuit lending industry to be subject to the same regulations as conventional lenders. In this state, we have a usury cap of 17%. This man has come into my office and said that he has no business in the state of Arkansas, no interest, so why in the world would we want to pass any legislation? But his company spends thousands of dollars having him come down here to see me personally, and thousands of dollars to hire lobbying interests to lobby the members of this legislature. It seems to me he does have an interest in the state of Arkansas, and I ask that we do the same thing that we've done regarding payday lenders and say, you can do business here, but you're going to have to do business in line with the statutes of the state of Arkansas that protects our consumers.